PantheonAI presents Google doubles down on AI, ECB, pause, sparks uncertainty, C3.ai, acquisition buzz. Good morning, everyone. Welcome to the PAI Morning Briefing. I'm John, and it is July 24th, 2025. Hope you've all got your coffee ready because we've got a really busy show ahead, diving into today's market action and economic insights.
Absolutely, John. And I'm Sarah, ready to jump right in. It's always a mixed bag, isn't it? Let's start with a quick look at those key market indexes and digital assets this morning.
You got it. So the S&P 500 is currently hovering around 6,370.66, showing a modest uptick of about 0.032%. Over at the Dow Jones, things are looking a bit brighter, roughly 44,803.55, up a slight 0.06% from yesterday's close.
Okay, so a little bit of green there. But what about the Nasdaq? That's usually our barometer for tech, right?
Exactly. And the Nasdaq, interestingly, dipped a little to approximately 21,059.064, a decline of roughly minus 0.117%. And it seems the smaller cap segment, the Russell 2000, isn't faring as well, coming in at about 2,263.18 with a drop of nearly minus 0.583%.
So a bit of a mixed picture on the equity side. What about the crypto universe? Always adds a spark of unpredictability, as you said.
It certainly does. Bitcoin's trading at just over 119,089.35, up by around 0.261%. But for those watching Ethereum, things are looking even stronger. It's sitting at roughly 3,722.5 with a robust gain of nearly 2.567%.
Wow, Ethereum really outperforming Bitcoin there. So definitely a mixed bag. But let's move beyond just the numbers, John. What are the major market trends fueling today's headlines?
Well, the spotlight in tech, Sarah, appears to be squarely on artificial intelligence, and not in a small way. Google, for instance, recently ramped up its AI spending significantly. Reports suggest they're channeling massive resources into what many see as the future of computing.
Right, and I heard that with new tax provisions coming into effect, Google, along with other industry heavyweights like Meta and Amazon, might have more flexibility to invest in advanced chips and bolster their AI infrastructure. It's like efficiency meets innovation, isn't it? This could really transform the sector.
Absolutely. Investors are watching closely because these strategic moves could signal a broader shift in the tech sector, impacting not just products, but market dynamics as a whole. And speaking of shifts, on the acquisition front, news out of C3.ai has caught analysts' attention.
Oh, yes. The chatter about acquisition odds jumping after some intriguing CEO remarks. Even though details are a bit scant, it really highlights how investor sentiment around consolidation in the AI software space is picking up. It makes you wonder, are we on the brink of a wave of corporate reshuffling in tech, or are these just isolated incidents?
Only time will tell, but stakeholders are definitely keen to see how that narrative unfolds. Now, shifting gears to regulatory news, the European Central Bank recently decided to press pause on rate cuts. And that's left economists and investors scratching their heads a bit.
It really has. Christine Lagarde, known for her measured approach, seems to be giving the market some breathing space, leaving the next policy move open to interpretation. For global investors, it's a reminder that monetary policy in Europe remains in a state of cautious flux, which could have far-reaching implications for capital flows and economic growth.
It's a classic case of uncertainty in the face of potential change, which often spurs more conservative moves. And right here in the U.S., the latest surveys from S&P on economic purchasing managers' indexes paint a nuanced picture.
Nuanced is a good word for it. Economic activity grew at a sharply higher rate in July, partly driven by a strong services sector. But manufacturing continues to struggle to keep pace, hinting at uneven growth. And inflation's still a concern, with price pressures not completely abating.
Yeah, the services sector really seems to be leading the pack in recovery, which might indicate a shift toward a more consumption-driven economy. But that uneven performance tells us not all parts of the economy are ready to celebrate just yet. So let's integrate these threads, shall we? Google's significant boost in AI spending, for instance, keeps popping up.
It does, John, and it's making headlines because it signals a major commitment to innovation. It's not just about staying competitive. It's a strategic narrative where tech companies are preparing for an AI-dominated era. With new tax provisions creating fiscal space, companies like Google are poised to invest heavily. The question is, can this translate into tangible advantages quickly, like lower operating costs or enhanced products? Or might it lead to more volatility?
That's the million-dollar question, isn't it? And then we have the ECB. Their decision to pause on rate cuts is generating a lot of conversation. On one hand, it could be seen as stability, a cautious approach. But on the other, it could signal policymakers wrestling with controlling inflation while supporting growth amidst global uncertainties.
Exactly. With unpredictable trade dynamics and geopolitical tensions, every move by central banks is scrutinized under a magnifying glass. It adds an extra layer of tension, almost like watching a high-stakes poker game at a financial roundtable, wouldn't you say?
Definitely. And then there's the rising optimism in the S&P economic surveys. The PMI show renewed vigor in services, hinting at a broader rebound. But the pain in manufacturing can't be ignored. This divergence tells us consumers and service industries are bouncing back, while manufacturing still faces headwinds from supply chains and older tech.
It makes you wonder, John, is it time for old-school manufacturers to reinvent themselves, or will they just continue to struggle as the economy shifts focus? It's an intriguing question that I'm sure many of our listeners are pondering as well.
Right? And finally, that intriguing tidbit about C3.ai. The notes on acquisition odds jumping suggest they might be on the verge of a significant deal. What could be the catalyst behind such a leap in sentiment?
Well, the evolving landscape of AI tech itself, where companies are looking at M&A to secure a competitive edge, it makes the market feel a bit like a chess match, where every move has a ripple effect, and every CEO remark becomes a potential game changer.
That's a great analogy. And speaking of repetition, Google boosting its AI investments isn't just mentioned once, but 3 times in our notes. This really underlines the gravity of the changes happening in tech. It speaks to a market confidence that the future is deeply intertwined with AI.
It's like a catchy chorus in a hit song you can't get out of your head, right? And those repeated references to the ECB's actions and the economic PMI surveys remind us that while technology grabs headlines, traditional economic indicators are still the backbone of market assessment.
Absolutely. It's in the interplay of these two worlds, cutting-edge tech developments and age-old economic fundamentals, that we see real market complexity. So if you had to choose one area driving market sentiment today, Sarah, would you lean towards the tech revolution or the measured, slow-moving engines of economic growth?
That's a tough one, John. I think every investor needs to seriously consider that. Switching gears, let's do a sector-by-sector analysis. In technology, today's narratives clearly revolve around massive AI investments. Google's announcement isn't standalone. It reflects broader shifts.
Exactly. With companies like Meta and Amazon potentially following suit, the tech landscape is set for intensified investment cycles. What does this mean for investors? If you're in tech, especially with strong AI capabilities, you might see increased volatility, but also the potential for outsized gains. It's like being on the front row of a technological renaissance.
It really is. Now, in energy and finance, while tech moves are making headlines, we can't underestimate traditional drivers like oil prices, banking regulations, and fiscal policy. Energy companies are navigating a transitional phase with renewables, yet traditional investments remain robust for diversified portfolios.
And liquidity and market sentiment in finance continue to play a vital role. The cautious approach of the Bank of England, the Fed, and the ECB adds layers of complexity. The interplay of policy with tech investments creates such a dynamic environment. Sometimes I joke that central bank announcements are like weather forecasts, always a topic of debate, and sometimes you bring an umbrella even if the sun's shining.
That's a perfect analogy. And globally, the market implications are significant. When a central bank like the ECB pauses rate cuts, the effects ripple across continents. Investors in emerging markets brace for potential capital outflows, while developed economies weigh cross-border investment implications.
And AI's grip on the future of business means major strategic decisions in Silicon Valley or the Bay Area have consequences far beyond national borders. This interconnectedness of tech, finance, and policy means what happens on one side of the Atlantic can quickly become the talk of the town in Asia. So I ask you, investors, in this intricately woven global tapestry, which thread do you think is the most critical to monitor closely? The swift movements of AI investment, the cautious dance of central banks, or the timeless principles of economic fundamentals?
That's a profound question, John. Now let's turn to expert insights and predictions. Many seasoned analysts predict we're nearing a period of rejuvenation in tech investments that could redefine asset valuations. With large tech companies potentially unlocking spending power through new tax provisions, we might see a flurry of strategic investments and more acquisitions.
It's a bit like an arms race, but instead of nuclear weapons, companies are stocking up on chips and data centers. At the same time, this increased focus on AI spending might prompt regulators to take a closer look. You know, with great power comes great responsibility, and a rapidly evolving tech landscape often invites scrutiny.
Right. There's a growing conversation around whether current tax codes and antitrust policies are robust enough for this transformative era. For investors, this regulatory landscape is both a challenge and an opportunity. Understanding it could provide a competitive edge. It begs the question, how will regulators balance fostering innovation with ensuring fair competition?
A critical balance to strike. And let's not forget the broader economic picture. The survey data on economic PMIs points to strong performance in services despite lingering manufacturing issues. This divergence hints at opportunities for selective exposure rather than broad market bets. If you're thinking sector rotation, perhaps it's time to look closer at service-oriented companies.
And the question remains, will this trend continue, and for how long? Diversification in these times not only mitigates risk, but also allows for capturing opportunities in robust segments. Moreover, mixed signals from global central banks add another layer of complexity. With the ECB, Fed, and other monetary authorities in flux, the global market could experience volatility.
It's a bit like walking a tightrope in a circus. One misstep could lead to a tumble, but the performance, if executed correctly, can be spectacular. I must say, sometimes I find it amusing how markets operate, much like our everyday lives. Imagine walking into a coffee shop where half the patrons are exuberantly discussing the latest tech buzz about AI, and the other half are nervously checking the weather forecast. That's exactly the atmosphere we have today in the financial world.
It really is. And trust me, it's this blend of high-tech excitement and cautious optimism that keeps our job infinitely interesting and never dull. So looking ahead, here are some key takeaways for you today.
First, despite minor fluctuations, major market indexes remain relatively stable, a sign that investors are still processing the many layers of news from both the tech world and traditional economic indicators. Second, the aggressive moves by Google and anticipated follow-through by Meta and Amazon on AI investments signal the tech industry is gearing up for a transformative period.
And third, the cautious stance by the European Central Bank, coupled with mixed economic signals from the United States, underscores a period of recalibration for global monetary policymakers. What does all this mean for you as an investor, John?
It means staying informed is more critical than ever. Diversification, understanding policy shifts, and keeping an eye on emerging tech trends could be the keys to navigating this evolving landscape. With increasingly complex relationships at play, from policy changes in Europe to rapid advancements in AI, I encourage you to consider broader questions. How might developments in AI reshape not only individual industries, but entire economies?
And in a world where technology is evolving at breakneck speeds, how do you balance the need for immediate returns with long-term strategic positioning? These are thought-provoking questions right in the thick of our markets today, and I invite you to mull them over as you go about your trading day.
Perhaps you have some personal theories or insights on how these global trends will unfold. It would be great to hear what you think. After all, every question we ask is a stepping stone to making more informed and strategic decisions. Before we wrap up, let's quickly spotlight some sectors garnering special attention.
In tech, the future of AI is center stage. We're seeing rapid innovation and aggressive spending strategies that promise to revamp digital infrastructure. For those invested, it's exciting. Potential gains are considerable, but it comes with volatility. In energy, while renewables gain momentum, traditional energy companies are still navigating the transition, creating both challenges and opportunities.
And in finance, the cautious approach by central banks invites a more nuanced look at investment strategies, analyzing interest rate risks alongside long-standing banking fundamentals. Looking at global market implications, it's clear no economy operates in isolation anymore. The interplay between European monetary policy decisions and the robust tech advances in Silicon Valley is a constant reminder of our interconnected world.
Investors benefit when they follow a global narrative rather than a localized one. So, ask yourself, as geopolitical tensions, central bank policies, and technological innovations converge, are you positioned to take advantage of the opportunities at any scale? That's a question worth pondering this morning.
Indeed. In closing, today's briefing underscores the importance of balancing innovation with prudence. As we see aggressive investments in AI and steady but cautious economic signals from various regions, the overall global market remains resilient yet dynamic. This is an environment that calls not only for a keen eye on detailed market developments, but also for an open mind toward future possibilities, and maybe a dash of humor when the volatility makes even seasoned analysts crack a smile.
Definitely. Remember, every market shift and every policy announcement is an opportunity to learn and adapt. I encourage you to approach these complexities with curiosity and to keep asking questions. What unexpected innovation might redefine your investment strategy? And most importantly, in this dynamic space, how can you harness the power of both quantitative insights and qualitative foresight?
Excellent points, Sarah. Thank you for spending these moments with us today on the PAI Morning Briefing. A special shout out to PantheonAI, our information copilot, for guiding us through these intricate market narratives with clarity and precision. Remember, learning shouldn't feel like a full-time job. We look forward to continuing our conversation tomorrow, so come back for the next episode. And as always, feel free to ask any questions to our AI copilot.
Until next time, keep your strategies flexible, your insights sharp, and your humor intact. A small smile can often be a big advantage in the face of market twists and turns. Have a great day ahead, and happy investing. PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.